you look at all the panics and depressions of the United States, they all came from financial collapses, usually preceded by perfectly asinine and greedy behavior. And I think there would be a lot to be said for taking an axe to our financial sector and whittling it down to a more constructive size.
Well, tell us more about how you use that axe.
Well, Warren, I'll make myself ridiculous, but I guess I'm so old I'm entitled to do that. I would have the tax system discourage trading. I would have various kinds of Tobin taxes. I would have securities trading more with the frequency of real estate than the trading by computer algorithms where one person's computers outwit another person's computers in what amounts to sort of legalized front running. I don't think we need any of that stuff. And I think making heroes out of the people who succeed at it is not good for the fiber of the country either. I hate the idea that 25% of our best engineers are going into the financial sector. So I think it's crazy what we've allowed. And I think the lack of contrition in our financial sector after the disgraceful stuff they got us into is perfectly awesome. It makes Dave Sokol look like a hero.
He's getting warmed up. Just as a sidelight, how many of you know that if you trade an S&P future contract, 500 S&P 500 contract, and you hold it for 10 seconds, and you have a profit that 60% of the gain is long-term gain and 40% is short-term gain. So essentially, our Congress has said that this activity should be more lightly taxed, than cleaning washrooms or doing all the things that you people do every day. That you get a special tax treatment. Now, that illustrates one of the problems with the tax code, in that there's a few people that care intensely about having that in there, and the cost of it in terms of less revenue for the U.S. government is diffused among a large group, none of whom have enough interest to want to go out and write their congressman or hire a lobbyist to fight the other way. But it's pretty extraordinary that we have decided that that particular form of activity should get 60% taxed at a 15% maximum rate, even though it may only take 10 or 20 seconds and be just a little flicker on a screen.
And the hedge fund operators of America get a much lower tax rate than the professors of physics or the drivers of taxis. This is demented.
If you take Berkshire at 260,000 people, that's about the number of households in the greater metropolitan Omaha. And perfect as we like to think we are in Omaha, I will tell you there's a lot of things going on in Omaha right as we sit here that do not match the rules. So it's a real problem. Now the problem obviously with the Sokol thing is that it hit very, very high up, but we had a case some time back where a fellow that was a friend of mine, vice president of one of our subsidiaries, and like I say, a personal friend, and we supplied the evidence that sent him to jail. It has happened. We had as I remember, some years ago, I think it was in Woodbury, New York, we may have had a woman arrested in the offices just because we want to make very clear, that we mean business. And as the audit committee said, that this is not public relations, this is reality. Here's a letter that went out from Johns Manville. I didn't know anything about it. till Todd Rava gave it to me the other day. But it describes what dated April 27th. And it said the audit committee clearly found that Mr. Sokol compromised the integrity-related values of both Berkshire and JM have worked so hard to ingrain in the fabric of both companies. This should serve as a tragic lesson learned for every employee in JM. And then in boldface, there are no gray areas when it comes to integrity. And it goes on. So we hope to get some value out of this experience that will help us reinforce with not only the 60 or 70 managers, but with 260,000 people that we do mean business on this, and we've showed them we mean business when we have sent more than one person to jail. But there will be, if we can have all the records in the world, and if somebody wants to trade outside them or something, they're not going to tell us they're trading in their cousin's name. I mean, it just doesn't work that way. And we will have occasions in the future when people do wrong things. Usually they get handled at the subsidiary level. I mean, it's somebody doing something, whether it's getting a kickback from a vendor or stealing out of a cash register or whatever it may be. And then, we get the occasional mega one, which is very painful. But we will, if there's anything we can do in the rules that will make it even more explicit or get across further the idea that rules are not made to be danced around, but rather that the spirit of them extends beyond them, we want to be sure we do it. Charlie?
Yeah, all that said, if you look at the greatest institutions in the world, they select very trustworthy people, and they trust them a lot. And it's so much fun to be trusted, and there's so much self-respect you get from it when you are trusted and are worthy of the trust, that I think your best compliance cultures are the ones which have this attitude of trust. And some of the ones with the biggest compliance departments, like Wall Street, have the most scandals. So it's not so simple that you can make your behavior better automatically just by making the compliance department bigger and bigger and bigger. This general culture of trust is what works. And Berkshire hasn't had that many scandals of consequence. And I don't think we're going to get huge numbers either.